Good morning, everyone. Bear with me here a moment. My computer gave me a little bit of trouble this morning, so I'm just finishing putting the trade manager on my charts. Come on, there we go. All right. Okay, so the market's just opening up. Yesterday's session went rather quiet as we expected after we saw that big decline and then another big rally up. Let's see here if I can see it on the Eagle without having to go back too far. Here we go. Okay, so here was yesterday, a bit of a seesaw. The market heading down out of the open, then recovering a little bit, taking us back to where the day began, actually a little bit higher. We closed out the session somewhere around here, and then the market did get some legs and ended up rallying a little bit, which was nice because we did take a long position and we were kind of sitting on that one. So that did turn out to be a pretty profitable move. And then after that, we just kind of drifted into the close. This morning, you can see that we are pretty much taking over from where we left off. A lot of back and forth. Trade forecaster suggesting that we are going to be in scalp mode for a while here. And with the FOMC minutes out later today, I think we can probably expect the market to be non-committal. There's not many reports that drive the stock market, but certainly the FOMC is a biggie, one that you need to pay attention to. Okay, we'll just let them move around here a little bit. I know it's going to be kind of boring, but so long as the market is in the sideways trading range, it's going to be tricky trading. There's two strategies that you can use when a market is in a sideways range. Oops, sorry, wrong button. When the market is in a sideways range like this. The safest strategy is to allow the market to break out, look for the retest, and then look for evidence that the market is going to continue. You're going to get a signal. Likewise, here to the short side, market's going to break out, it's going to retest, and then it's going to produce a signal. That is the safest way to trade a range-bound market. It's also very boring as we wait for the market to do something. The more aggressive among you may choose to trade the trading range, in which case what you're going to try to do is you're going to try to short as the market enters the top quarter or top third, and you're going to try to buy as the market enters the bottom quarter or bottom third. And you can see we're getting some selling going on now as we encounter these highs. There's obviously sell orders up here. You would use a limit order to do that. So you would set up, and I wouldn't suggest using your risk percent mode here. I would suggest probably going into manual mode. So you would look to short around here, probably throw your stops up here. I don't think you'd be going for such a big target. You probably look to scalp maybe $50 or $100 if you can get it. And what you're doing is you're trying to predict where the market's going to go next. Not an easy thing to do, by the way, although it looks like it's going to work out on this one. There you go. Whoa. Gee. Should have done that. A quick little move lower. All right. Shall I demonstrate here on the bottom end? If the market gets back down here, should we try to buy it on the bottom? We'll risk it out to there. I'll reduce my profit objective. So we'll park our limit order somewhere near the bottom. So a limit order is the type of order you will use when the market needs to come down to your order to hit it. Normally, we use a stop order that the order has to trade through it. These kinds of trades always make me nervous. Trying to predict what the market will do next. But there's really not much going on until the market gets outside that trading range, as I mentioned. This is what I would consider a lower probability risk trade. The good news is that you can keep your dollar amount pretty small. The probability that the trade will work out is also relatively small. As I said, anytime you're in a predictive mode, it's a little bit different. Question here from Mickey, and thank you, Mickey, for asking a question, because otherwise we'd be sitting here for a while. Mickey asks, when you set up like you did, do you specify the limit order? And I'm not sure. Sign, it defaults to a stop order. Okay, so I'm assuming that was a little bit of a typo there, but yeah, anytime you are making the market come to you, you need to use a limit order. And you can select your order type right here. So stop is the one we normally use. Limit is when the market comes to you. A stop limit is what you would use in a very fast market. Crude oil used to require the use of stop limit orders because crude oil would move so fast you could routinely take, well, I know a fellow who routinely takes an 8-tick slip in crude oil, and I said, you ought to talk to your broker because an 8-tick slip in any market is unacceptable. But you could set the stop limit allows you to preset the amount of slippage that you will accept. And then a market order, of course, gets you in at whatever price. The market order is the same as using your buy and sell buttons. Okay, we are making some higher swing lows here. We keep bouncing off of the 782, 783, sorry, 7282, 7283 zone. Which is making me think there could be a bit of a bullish rally here, maybe. Let's see what else we got going on. No, everything is pretty neutral. We're quite conflicted, really. We've got the eagle here, which is, well, the band is moderately bullish. It keeps flip-flopping. We can get a better picture of that here on the Raptor. I know I'm going to be getting emails from people today saying, what's wrong with my Raptor? I get these signals and there's no follow through. I get a signal and there's no follow through. What's wrong with your software? This is one of these situations where you cannot ignore the left side of your chart. Context is muy importante, as they say down in Mexico. You have to consider the context. Now, to this end, the Geiger counter is kind of useful for that. So, you know, if we get perhaps a buy signal, or let's say we get another number 2 signal, let's say we get our 232 style setup, and the Geiger counter needle is turning red, okay, maybe I'll give that a whirl. Maybe I'll throw a single on there, see what happens. Right now you can see the Geiger counter a little bit more bullish. And you can see now the Geiger counter again getting kind of neutral, which is what we would expect. So there's not a lot of follow through one way or the other. We might see a move here yet. Here, let's demonstrate the limit order now here at the top end. This is a little bit riskier because we've had a couple of swings the other way. So my order is pending. It is not filled because the market has not come up here to hit my order yet. Chances are with all these higher swings that the market is going to try to rally. All right, so now I got filled and I'm short, but you see, there's the challenge with a limit order. Where do you place your stops? Now, some people, here's a little, not really a trick, but a lot of traders know that breakouts outside of trading ranges do not go very far. So you could even have put a limit order above here somewhere. Rather than, at the where I placed it, rather than placing your limit order within the range, look for the breakout to fail. So, you could set your order up here somewhere. And you can see it can be quite lucrative if your timing is right, but that's the challenge. The timing is very, very difficult to do. And it looks like that's kind of where we're at right now, with more chop, 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 chop. All right, well, while we are waiting on this, I see there's a few new people in the room, so let me take a moment here, a few new Raptor owners. Let me take a minute to go over the Raptor signals just as a review. People are always worried that they're missing out on something with the Raptor signals, but honestly, we have worked very hard to make them as simple as possible. There's a lot that goes on behind the programming as well, but visually, there are usually two cues that you need to fulfill for a signal to print. Your number one signal, let me find one that looks a little prettier. There we go. Here's almost a textbook number one signal. Your number one signal is your cloud crossover signal. Your number one signal attempts to find an emerging trend. So your number one signal will form when your clouds change direction. Your clouds need to cross. So when the clouds are stacked, this is what we call the soft edge, that faint line. This is what we call the hard edges, this bright line. When your clouds are stacked with the soft edges above the hard edges, the market is bullish. When the clouds are stacked the other way with the soft edge below the hard edges, the clouds are bearish. People often ask me about the soft edges in the clouds. Honestly, folks, I don't pay that much attention to it. If you find something that the market seems to respond to the soft edge, then I would certainly appreciate you sharing it. But for the most part, I'm just interested, is the market bullish or is the market bearish? When your clouds change direction, so we've gone from a bearish cloud to a bullish cloud, there will be a pullback period. Once that pullback is complete, if the market continues in the new direction, it will produce a number one signal. So this is the Raptor saying that, okay, I think a new trend is emerging. Here is a buying opportunity. So at this point, what you need to do is you need to do your analysis. You need to look at your chart. You need to say, all right, is this a doable trade for me? Is this going to be, we were talking about trade quotas the other day. Is this going to be one of my best opportunities today? How should I set this trade up? Well, normally I would try to keep the market 2 swings back, or my stop 2 swings back. So there's swing 1, there's swing 2. See, trade manager says, no, sorry, Eric, you can't afford that trade. So now I either wait for another opportunity, or maybe I'll look at, if I really, really think this is a great opportunity, let's say my Geiger counter is like this, everything is just looking full on bullish. I really want that trade. Well, I can set up the trade. Maybe I can use my support and resistance line. I'll use the median line right here to cover. Oh, see, trade manager says, nope, sorry, Eric, you can't do that either. That's a little bit too far out of reach. I don't know why that would be. Hold on, what's going on here? Okay. My trade manager is acting up here a little bit. So if for whatever reason your trade manager ever starts to act a little wonky, oh, I see. What the heck? It's trying to line up with the wrong market. So just remove your trade manager, apply, double click your trade manager. This is why it's helpful to have save some templates so that you can quickly load a template, load your account. All right, so that is a doable trade then. All right, so I could take the trade this way, or let's say I decided to do a second push opportunity. So I allowed the signal to engage. I see where it flinches right there. So now I use that as my signal bar, and maybe this will allow me to get by with a slightly tighter stop. Logistics come into play as well, because I'm looking here at this high. This is where the market turned before. So maybe I'll, I got to consider that. Do I have enough room that I can at least adjust my stops in case there's more selling up here? All right, so that's signal number 1. I'm going to skip ahead to signal number 3 because it is a continuation signal. Signal number 2 is a counter trend signal. The big deal with the number 3 signal, let me find you a nice one here, is that it is a continuation signal. So because it is a continuation signal, it has to have something to continue. If there is nothing resembling a trend before your number 3 signal, then you need to be a little bit suspect about the number 3 signal. The number 3 signal is a hard edge bounce. So the two components for your number 3 signal is at first you need to have something resembling a trend, and secondly you need to intersect one of the hard edges. So it's going to intersect the hard edge, it's going to come out, and if it looks like the trend is going to continue, you will produce a buy signal, or in this case a buy signal, and a number 3 signal. Let's see if I can find you another one. Oh, well, here's several. So here the market is in a downtrend. We intersect the hard edge, we produce a number 3 signal. Come back, intersect the hard edge, produce a number 3 signal. Note these signals here. So the market comes up, came up one tick short of the hard edge, produced a signal. But because it did not intersect the hard edge, it did not produce a number 3 signal. And yet, this is a number 3 signal. This is why it's important for you to learn how the signals produce so that you can take advantage of these types of signals when they develop. Visually, it is a number 3 signal, even though we're only a tick or two shy of the hard edge. This one, however, is not a number 3 signal because we're still quite a ways away from the hard edge there. This is what we would refer to as a discretionary signal. If the market conditions are such that you feel it's still a good opportunity, well, there the Raptor is saying, hey, all the signal parameters are met. It's up to you whether or not you want to take it. So, certain things will come into consideration. A very quickly moving market, the bars are unfolding very, very fast. You can just tell there's a trend there. You don't want to wait for a big pullback, so there is an opportunity for you to get a follow-up signal. We don't want to see too many signals printing in a row. Here we get yet another number 3 signal. So we have number 3 signal, pullback, number 3 signal, pullback, number 3 signal. That kind of suggests a little bit of weakness. So the first one, yeah, no problem. Or even the first two, the first couple of signals. But if I print number 3 signal, number 3 signal, number 3 signal, I'm going to start to get a little suspicious that maybe there's not going to be as much follow through. All right, so that's a little something for you to bear in mind. The number 2 signal is a counter trend signal. And as with all signals, there have to be 2 components. So the first component is if it's counter trend, well, first you have to have something resembling a trend to go counter to, don't you? So we've got a trend, and then we will have the all-important test of the extreme. In this case, the extreme is the low. We need evidence that the trend is no longer able to continue. So the market comes down, makes a low, rebounds, hits the number 3, or it hits the hard edge, comes out, produces a number 3, and then turns on its heels and starts to go back and say, nope, not ready to go lower. I'm producing a number 2 signal. This is your counter trend signal. You're going to find some of your better opportunities are going to have this 2-3-2 combination. So it's a little something to keep a lookout for. Even sometimes it will be a visual number three, or pardon me, the number three, if it comes up a little bit short. So you may just see a 2 and a 2. This number 3 may not print, but you may still have had that pullback. It may just not have intersected the hard edge. The best number 2 signals are also going to come when your trading band is very, very broad. When your trading band gets to be about 40 or 50 ticks high, you can usually anticipate a reversal. Now note this one right here. This is a counter trend signal. It did not print as a number 2 because, well, the programming parameters were not met. However, it is a number 2. There's the trend that needs reversing. And then we had just a very, very subtle retest of the high. And then it came back with a number, or with a selling opportunity. This one is one that you would look at it and you would think, oh, well, maybe I'll throw a single contract on it. I have to cover the trade above the high in case there's a bigger retest, but it is still an opportunity that's forming. Again, you may look at your Geiger counter, the needle may be like this, full on red, and you'll say, yeah, okay, I'll give it a whirl. Target for your number 2 signal is the hard edge of the trading band. So right down here, that's why we like to see a broad band as well. But you can see this one had no difficulty getting to the profit target, got to the hard edge, gave us a little bit of a hiccup, and then started to continue lower. You'll sometimes hear me refer to signals like an early number 1 signal. An early number 1 signal develops when the market looks like a crossover is going to occur. However, it hasn't occurred. So you're going to get this kind of situation. You're going to get the clouds almost fully crossed. Well, this one's about 50-50. But you get the idea. The clouds are starting to cross. It looks like the momentum is down. It's not going to print as a number 1 signal because the clouds are not fully crossed yet. But the clouds are crossing. We've had a pullback, and now we produce a sell signal. So this is what I would refer to as an early number 1 signal. Again, stops need to go fairly deep in case there's a bigger retracement here. Or you could try to hold on for a second push opportunity. There you go, you got a second push. And then you could try to take the market lower. The thing with the early number 1 signal, actually this one would have been a little bit better still as it unfolded here, because at this point you can see the clouds are almost fully crossed. And what I was going to say is, even with the early cloud crossovers, you will produce a proper cloud crossover when the clouds actually do completely cross. You will note, though, that sometimes there are times that just the way the market is moving, you're thinking, oh, I should probably try to get in early. And that's when the early cloud crossover occurs. When you look at your chart and it looks like this, you know you're just in a sideways mess. You get a lot of background, you get a lot of signals producing. You know, it's just obvious you're in a sideways market here. I doubt very much we are going to have any decent opportunities until the FOMC minutes come out. Let's take a look here at the Hawk Scalper. Actually, I should No, that one's on the right market. Okay, oops. We had a first micro macro cross lower here. First micro macro cross higher here. Took a little heat, but it did get up to its profit target. Yeah, it is tough slogging here this morning. Look at all these yellow bars clustering. There is no follow through. Grist for the mill, as they say. Here's another first micro macro cross lower. Does have a second push, or a third push even. Oh, every time I try to set it up, it keeps sneaking past me. Well, we'll leave that alone. Probably see a trickle to the downside. Good question here from Mickey. Mickey asks, is there a difference when the warning dot and the triangle are on separate bars versus when they occur on the same bar? No, not really. You will see the warning dot and triangle print a lot on the same bar when the market is constipated like this. The eagle, you will see a lot of that as well. You will see the warning dot form first. You'll get the audio alert, and there is a chance that this bar will also turn into the signal bar, in which case the triangle will print, but you can see it's not always. No, it really just depends on how the programming parameters are met. Every component of the DTS and the Raptor, there are quite a few algorithms working behind the scenes. There's more than just what you see here going on. There's quite a few parameters that have to be met before a signal will produce. And you can see the flip-flop is just continuing. Just the slow, painful grind. Overall, we are bullish, but just barely so. And I say that because we're making higher swings. Oh, did we just see a trend line bounce? Oh, we did too. Look at that. That may have been the best buying opportunity here today, that trend line bounce. Well, everything is sideways here this morning, and I suppose it's to be expected. Back now here to the high of the morning, and you can see we got some, or the high of the opening range anyhow. You can see we got a little bit of selling coming into the market again. Dan asking, when is the report due out? Well, let me show you. We have this information as well at Indicator Warehouse. I'll show you where you can find it. And then I'll show you the resource I use. So if you scroll here to the very bottom, oh, where did it go? There it is, economic calendar. It's well hidden. Come on. So if you go to the Indicator Warehouse main page, roll down to the bottom, click on economic calendar. No, it's not working. Yeah, let's try to. Stupid thing. All right, let's put that away for now. Here is a very useful resource. Forex Factory, these guys have done a good job of the calendar. And it's these little red folders that you want to pay attention to. And for our purposes, we're looking at the ones that affect the US dollar. So crude inventories out, and this is Pacific time. You can set your time zones by clicking on here. And you can see the FOMC minutes out at 11 a.m. Pacific, so that'll be 2 p.m. 11, 1, 2, yeah, 2 p.m. Eastern. So until then, it's probably going to be a little bit of a dud. Good question here. Gary asks, what is the tick size you use for crude oil? Well, crude oil, you can use the just the default. Hang on here a second. Let's see if I can. Yeah, doggone it. I've made some changes to my data, and I think they dropped the NYMEX from my data assortment. Because I'm not getting crude. I hate these pop-ups that Ninja does with the ricochet. It's most annoying. If I can't show it to you on crude, Gary, I'm going to show it to you on the E-mini, but bear with me here a second. No. Okay. Okay, we'll just let the E-mini load here, and I will bring it over and show you. So with the default settings, we're running an 8-tick brick. We're running a so we go to our indicator window, find our Raptor. We're running an 8 and a 12 brick cloud and a 6 brick hawk. Okay? If you put that on your chart and your chart starts to look like this, and these are your daybreak lines, everything's a little bit too congested, isn't it? You're not going to get enough opportunities. This is what's going to happen if you use the default settings on any instrument that is over $12, or pardon me, over $10 a tick. Namely, the E-mini is the most prominent one. Or if you are looking at a market that is rather slow moving, sometimes some of the currencies, like if you're following the Aussie dollar or the Canadian dollar, there won't be enough going on in the session to produce a lot of bars, because we're using a range style bar. If the market's not making a lot of ranges, if there's not a lot of volatility, then it's not going to go very far. In that case, you can go to the alternate settings, the 446 settings. So we're going to run a 4-tick brick. You do that from your data series. And then you go here to your Raptor 2.0, and we're going to change our brick size. So the first cloud is going, the slower cloud is going to be 6 ticks. The second cloud is going to be 4. And your hawk bars are going to be 4. So 4, 4, 6. The easy way to remember that is the telephone prefix in Moose Jaw, Saskatchewan. All right, so there, now you'll never forget it. What this does is it will force the Raptor to produce more bars, and it will expand the session that you can actually see some opportunities develop. When you apply the faster settings, you want to pay attention to your time chart as well. You don't want to have so many bars that you get bars starting to print in the seconds, like it would say 12:17:01, 12:17:03, 12:17:09. That's unfolding a little bit too quickly. You won't be able to make any decisions. The market's going to unwind far too fast. But you can see what that will do is it will expand the Raptor. Now, currently with crude, I would probably go with the 446. You can try the defaults. If it looks like you're getting enough opportunities with the defaults, then go with that. The nice thing about the default settings is it kind of quiets some of the noise. But you should be all right with the 446. See, I won't do let me do the 446. We'll throw the NASDAQ on here, just so you compare the fast NASDAQ with the regular NASDAQ. Okay, so you can see here we produced a number 1 signal, and that came at 7:13 my time. The faster Raptor with the 446 was already producing, well, it was producing a number 3 signal when that number 1 signal was printing. So you got a number 1 signal a couple minutes earlier, as the number 2 signal was printing. I suppose you could run a companion chart. More information is not always better, though. If anything, more information tends to cloud your judgment. Believe it or not, trading is not so much about being right as being able to make a decision. You can recover from a loss, but it's really hard to recover from the inability to make a decision on a trade. They say that's what made Henry Ford so successful. He wasn't, well, I'm going to say especially bright. He was very bright. After all, he invented the automotive industry as we know it. But what I mean is there were engineers smarter than he was. There were financiers smarter than he was. There's certainly marketers smarter than he was. That was not his strong suit. But they say that you could come to him with a question and he would give you an answer, an unwavering answer. And once he made a decision, he would not change his mind. Sometimes to his hurt. But it is a very important trait to have as a trader, to be able to look at a chart. And again, you're never going to have all the pieces to a puzzle, but to look at a signal and analyze what's going on, and then be able to make a decision and say, yep, I'll buy that, or nope, I'm going to sit on my hands a little bit longer, wait for another opportunity. Like I say, when the market's in a mess like this, I lean a little bit more on the Geiger counter. I want to, if I get a buy opportunity, and I think we may have even had a green Geiger counter when this opportunity was printing, then I may give it a whirl. But otherwise, if the market goes up without me, that's okay. You're going to miss moves. The advantage you have is you miss moves and nobody knows about it. When I miss a move, everybody sees it. And then it goes up on YouTube and everybody sees it. But there's always another opportunity. Like I say, you just need to you only need to find a couple good opportunities a day, sometimes only one. Unfortunately, now that the market seems to have taken a bit of a bullish posture, we may have to wait for a pullback before we can try to buy into it again. And you're going to recognize opportunities as well as you spend some time with your charts. First, it's going to kind of be a gut call. You're not going to know why it looks like a buy or sell, but something in the back of your mind is going to say, I've seen this before. Michael's asking, how do I add the Geiger counter to my chart? The Geiger counter is what we call a system add-on, and I'll show you where you can find those right away. As is the trade forecaster, as is the day ranger, as are the support and resistance lines. The Geiger counter, if you go to your here we go. If you go to the indicator warehouse page, you can search Geiger counter. Or here, why don't I just put this in the window? There you go. And a little video about it, a little blurb about what it does for you. Essentially, the Geiger counter is a tape reader. So what it does is it shows you the data flow, right? The traditional tape reader, hold on a second here. Is your time and sales window. And you get that by, I should have shown you. You go here, new, time and sales. You right click and you can select your instrument of choice. So you can watch the order flow go by, and you can see it's mostly onesie twosie traders here this morning. Most people don't realize, you think that, well, there are big institutions trading this as well, but most people don't realize how many small orders actually flow through the market. I suppose especially on a day like today. And so you can see the bid and ask, that's kind of our bid and ask histogram right here. What the Geiger counter does though is it takes all this information, runs it through an algorithm, and it gives you a nice visual interpretation of what's going on. This is very, very difficult to interpret. That's why. It's funny, I'm chuckling because I've known so many people who try to study the time and sales to get an edge on the market, and it just ends up driving them crazy. Literally, it's enough to make you bonkers. But the Geiger counter is very helpful in this respect. You can see the selling that goes through. So here you can see there was a block of selling. The buyers soaked up most of it, but not all of it. You saw the needle turn red. What I like to see is I like to see this dial. I like to see when the dial, it's always swinging back and forth, and you think that it's not making any sense. But when the dial pulls one way or the other and stays there for like 3 or 4 or 5 seconds, what that shows you is it shows you a lot of aggressive buying and selling, kind of chewing through the marketplace. Did I select the right one? No, I probably need the static. Oh, well, here, let's choose the right year for starters. There we go. Okay, so you saw how, okay, now it's, well, we got to stay with it. Okay, it's kind of favoring the top end. If we see it pull one way or the other and stay there, you're going to see a lot of these orders start to fall. A lot of people try to watch the dome as well to try to gain an edge on the market, and it too will drive you crazy. Don't say I didn't warn you. But here we're producing a number 2 signal. We're kind of got a, oh, there we go. We got ourselves a bit of a bearish bias. So maybe I'll take a single, I'll short it. And, oh, we took a little bit of a slip there. So the Geiger counter is kind of confirming what we're seeing here. You can see I'm a little bit late in the trade, but I can adjust my profit target and my stops accordingly. And it just kind of confirms or helps confirm what's going on. Frank asks, what is your opinion on incorporating order flow into your decision-making process? Well, you know, I like to see this. I'd like to see more selling going on than buying if I'm looking to take a short position. I suppose it depends on what it is you're using to interpret your order flow. Like I say, reading the time and sales can be very difficult. A visual tool like the Geiger counter can be a little bit easier to read. Come on, get down there. You can see they're struggling a little bit. The needle's getting green now, so there's obviously some buying going on down here. I'm going to bring my limit order up, try to squeeze this trade. All right, well, got enough for lunch. Lunch and a cup of coffee. Some people like to follow if your data provider includes level 2. Where is it? Some people like to follow level 2. Now, level 2 just shows you another level of buying and selling. The dome that I showed you. Where are you, dome? The dome is level 1. This is level 2. So it's kind of showing you these orders up here. And some people think that following the level 2 will show you whether the market is, which way the market is leaning, whether it's going to be more bullish or bearish. There is so much information out there. It's really, Frank says, I guess people who are colorblind have a hard time trading. That's good. I like that. There's so much information out there. You can literally drown in it. And you need to be very selective about the information that you're going to incorporate. Otherwise, your charts will end up looking like this. And this is an honest to goodness chart from a fellow that I was teaching, coaching, and I asked him, okay, well, here's your chart, and you can see he was throwing everything on there. He's got moving averages, he's got regression lines, he's got a Donchian channel, he's got MACD, all kinds of oscillators, stochastics. I said, okay, well, show me a buy signal. And he said, well, okay, well, I would have bought here. Oh, no, I wouldn't have bought here because the market came back down. He was doing everything in hindsight. You know, I'd say, well, show me a sell signal. And he said, well, I would have sold here. Oh, no, I wouldn't have sold there because the market went up against me. And no, you get so much stuff going on. You're going to get so much conflicting information. Don't do it. It's a rabbit hole you will never emerge from. Adam used to call it mental masturbation, and I think that's probably a good way to look at it. Trading has more to do with your money management, how you expose yourself to the market. So here we have a hard edge bounce developing, right? We're in the hard edge, we're producing a buy signal. It's not going to print as a number 3 because our clouds are out of sync, but visually it's a number 3 signal, right? So we're looking at this and we're saying, okay, well, the market's in an uptrend. Maybe I will try a second push on this one. And I'll risk my initial stop down to here. If you can afford the risk and you think this is a good opportunity, then you should take the trade. And you should manage the trade the best that you can. So here, we got nothing going on. Let's throw that order in there. We'll see if the market rallies up here a little bit. I have a feeling we're probably going to fall back down and retest what's been going on here, maybe get back down here to the primary resistance line around 72.83. But we'll see. Okay, so we're coming up now, the second push opportunity on the number 3 signal, the hard edge bounce. By the way, because the clouds were out of sync, the next buy signal that will print will actually be a number 1 signal because your clouds will have crossed from a slightly bearish to a bullish posture. But what I'm hoping to show you here is some trade management. So first off, we're protecting ourselves because we're not overexposing ourselves to the market. If I do nothing else with this trade and it brings me in and stops me out, I have not lost more than I can afford. It's going to be really hard to go broke losing 1 or 2% of your capital. You know, you have to hit a really, really long string of losers to wipe yourself out, risking 2% of your trading capital. But it's when you get up there, when you start risking 9, 10, 15% of your capital, okay, then things get a little bit dodgy. All right, what I'm looking for now is a reason to bring my stops up. Now, some of you will say, well, Eric, why don't you just use like your ATR stop and go with that? Well, you can, and it looks like when the market's rallying, it covered it pretty well. But, you know, if we're in this kind of situation, you can see I'm just going to get myself stopped out too early. So I'll hold my stop and I'll do a manual adjustment. And what I'm looking for now is I'm looking for another swing to develop. I'm looking for the buyers to show me that perhaps they're going to come back into the marketplace. And I don't know where that's going to be. I suspect they're going to do it down here somewhere. This is where the market rallied back here. It rallied here again, although not as far. So I know the buyers are keen to buy somewhere around 72.90. All right. So there's swing one, there's swing two. I can probably roll my stops up here. What I would really like to see is I'd like to see a break above here. That would make it easier for me to roll my stops. They're thinking about it. Come on. Trying to make a point here. They keep kissing 72.98. I've got my eye on this bar right here, this one with this long tail to it. If I got anxious about the trade, I could roll my stop underneath there. Really put the squeeze on the trade, but I'm going to try to give them a chance to follow through. You can see the higher we get, the closer we get to the resistance here where the market sold off before, the more likely it is that the sellers are going to try to step up. Okay, given the way the market is today, I'm going to put my break even just above the high of this bar. So on the next bullish push, I will accept a break even position. If I can get it. And my thinking is, well, there's selling going on here. So if I can take out some of those sellers, the market should try to advance a little bit more. maybe even get above 7,300. Okay, so there's my break even, and hopefully we get a little giddy up and maybe even sneak up to the profit target. Make me look like a rock star. Get up there. By the way, visually, we had another number 3 signal right here, didn't we? Once this signal prints, once it completes, it will print as a number 1 signal. We're going to get a warning up here for a number 1 signal soon. If it goes higher, that is. Believe it or not, the best stop for this market is still back here. That would give you the most staying power, but just the way the market is today, I'm not prepared to give it that much room. All right, well, there we go. Got tagged at break even. The market's probably going to slip up and retest these highs just because that's what they do. And then it will probably turn and retest the lows around 72.90. All right, well, you know what, folks? Unless anyone has any more questions, we may just button up shop here a few minutes early today. There's really not much more going on. Type quickly. If you think of something after the fact, you can always email me as well. If you are going to hang out, like I said, the FOMC minutes, that's going to be a real deal breaker here for the market this morning. I think it's going to shake things up. So be careful going into the report. Things are really, really quiet. So that usually means there's going to be a breakout around report time. All right, no more questions. I will see you tomorrow. Have yourselves a great day. Talk to you then.